Everything begins with a single vertical line. The market collapses to its lowest point. We place Meravith to evaluate the current market. Observe the exhaustion lines. The bullish line falls, showing decreasing bullish volume. The bearish line rises, showing decreasing bearish volume. Yet the trend line remains bullish. Next, we look at the distance from the trend line to both exhaustion lines. The larger distance to the bullish exhaustion signals bullish potential. Later, the situation changes. Bullish volume keeps falling. Bearish volume rises. The trend line, however, is still bullish. Proof that the overall volume remains bullish. Now, the distance to bullish exhaustion is smaller, while the bearish distance grows. Bearish momentum increases, but the trend is still bullish. Let's examine support. By pressing the C button, a channel appears. One bullish and one bearish deviation. Buy on the green line, sell on the red line. In our case, the trend is bullish. We buy here. But if you believe the market will fall, you sell here, on the red line. Now we enable volume deviation, the VD button. Blue dots mark candles, where volume exceeds the average by 2 standard deviations. Purple dots mark candles, where volume exceeds the average by 3 standard deviations. Volume acts like gravity, warping support, resistance, and targets around it. That's why we add the white line, a double deviation of support. It adapts when heavy volume appears. In this case, after appearing big volume, we use this line as a new entry point. The market breaks upward and reaches bullish exhaustion. High volume pushes exhaustion even higher, a signal for everything that follows. Then comes correction to support, whether on the channel, the trend line, or the lower white line. These white lines mark the support channel, and here we open long positions. When price reaches the bullish exhaustion line, we close our positions and collect the profit. After volume exhaustion, we look for a new entry and fresh volume. We may switch to another time frame or move the purple line to a new position so that the market reveals volumes not yet exhausted, volumes we can chase. On our chart, the market breaks upward. Meravith automatically shows the next exhaustion level, and we can continue trading within this newly formed channel. It is a matter of choice, which of the options we follow. For deeper evaluation, and to take advantage of the other indicator lines, we can reposition Meravith to better assess the market and uncover new opportunities. This is the last support before exhaustion. A small trend without volume. Support is limited to the first deviation. We buy here. Let's see Meravith's other tools. First, the 95% channel. It covers 95% of candles, lie within the last 20 bars. When price moves outside, it signals a strong move ahead. Next, the 99% channel. Same principle, higher confidence. Press the E button. Meravith reveals Enigmera levels. And finally, the MID line. Always at 50% of the trend. Above middle is bullish, below is bearish. A critical psychological level and a strong support or resistance zone. Meravith is a system of tools that delivers a clear market evaluation. The core of the market.